Good evening. This is Ken Long from Tortoise Capital Management with the market health check for the evening of September 17th, 2009. Okay, we're taking a look at the market health check here, and what we have is a doji after 9 out of 10 days up in a row from this low here. You can see that move. It's put us back into that green box or the bull quiet mode. We're still looking at a positive slope on the 20-day and the 50-day moving average. Last week we had support identified at 102, 100, and 98. We can raise that up now to 104, 102, and 100 based on holding support here at 104 and the fact that the 20-day moving average is at 104. That's a 4% move from the highest high back to the first test at 104. You can see that ADX has continued to move up, plus DI greater than minus DI. Volatility remains low. We are still in overbought conditions, and as we've seen in previous episodes this summer, we can stay overbought for a long period of time. In the MACD histogram, we're into the summer season here because we've come from spring all the way up into summer, and the ADX is at quite a wide difference between plus DI and minus DI. In the daily summary, you can see we're still in bull quiet. On the 10-day index, we're at 89 or well over overbought. You can see that we're overbought up in here. It's interesting to note that in the gap stat, we're now gap and reverse is now only happening 43% of the time. That is a complete reversal from the last month when gap and reverse was the norm. That's now not the norm. Take a look at the 10-day max pain. We've got some interesting candidates among the old reliables: General Electric, Alcoa, Kraft, and Verizon. That remains on our short list of things to pay attention to. No signals on the overreaction system or in the channeling system because of the power of this latest intermediate bull run. We're up to 107.28 in the pivot point. You can see that we're very quiet at it with a 4 on the volatility index, which keeps us in quiet. The slope of the 30-day moving average has hooked back up across its 10-day moving average after pulling back 1.5 standard deviations. Because this crossover happens within a standard deviation of the mean, it's not as significant as when it makes a pullback or a reversal from an extreme condition. You can see how the SPY volatility has just gotten so quiet. Here's the histogram on ADX plus DI and minus DI, and you can see this last powerful move that's just proven the critics wrong. Verizon, Travelers, Walmart, Intel, and Kraft are all oversold on a 10-day basis using the 10-day index. And you can see the very powerful moves in Disney and Coca-Cola at the top end. They've been leading the way. On the daily tactical report, you can see that there's an awful lot more stocks that are overbought. That's all of these little rascals here, from Coca-Cola through McDonald's. And you can see up at the other end, the max pain candidates include big losers today: American Express, Alcoa, Verizon's, and Travelers. They're well oversold on a 10-day index, and they are max pain candidates, so they're going to be on my short list. You can see an awful lot of the ETFs are flashing green on the 10-day index, meaning they're overbought as well. I'm interested in real estate, which has been strong, but which is in max pain conditions because of the pullback from the 10-day moving average. Emerging markets are showing perhaps a buy-on-dip opportunity if we see more strength in that area. Today the losers were in the commodities. The winner was in treasuries. Natural gas remains the most anomalous commodity of all. So those are some of the tactics that we're going to be looking at. With the market overbought And on 9 out of 10 days in a row up, we're looking to make sure that we take advantage of intraday strength, but preserve profits in open positions and be very careful about market reversals here. A 4% pullback only gets us to the first level of support at 104, so we're going to be very cautious here. So, thanks for your attention.